Are you over 66 years old and struggling to make ends meet on your pension? What if I told you that you could be missing out on up to £5,600 per year in financial support that's rightfully yours? Thousands of pensioners born before 1959 are leaving this money unclaimed, and you might be one of them. Stay with me, because in the next few minutes, I'm going to show you exactly how to claim what could be life-changing support that covers everything from heating bills to housing costs. Welcome back to my channel, where I help you navigate the complex world of benefits and financial support that you deserve. If you're new here, make sure to hit that subscribe button and turn on notifications so you never miss out on important information that could put money back in your pocket. Today, we're diving deep into one of the most underclaimed benefits in the United Kingdom, pension credit. This isn't just another government scheme. This is a financial lifeline that could dramatically improve your quality of life during your retirement years. Whether you're living alone or with a partner, whether you rent or own your home, there's a strong chance you could qualify for this support. By the end of this video, you'll know exactly what pension credit is, how much you could receive, who qualifies, and most importantly, how to claim it step by step. So grab a cup of tea, get comfortable, and let's unlock the financial support you've been missing. Pension credit is a government benefit designed specifically for people who have reached state pension age and are living on a low income. Think of it as a top-up to your existing pension that ensures you have enough money to cover your basic living costs with dignity and comfort. The beauty of pension credit is that it's not just a single payment. It's a gateway to numerous other benefits and discounts that can collectively save you thousands of pounds every year. The current system provides two distinct types of pension credit, and understanding both is crucial because you might qualify for one or both depending on your circumstances. The first type is called guarantee credit, which tops up your weekly income to a minimum level. For a single person, that minimum is currently £218 and 15 pence per week, and for couples, it's £332 and 95 pence per week. This alone could mean an extra £5,600 annually for eligible individuals, or even more for couples. The second type is savings credit, which is specifically for people who reached state pension age before April 6, 2016. This is where being born before 1959 becomes particularly relevant. Savings credit rewards you for having saved some money for your retirement beyond the basic state pension. You could receive up to £17 1 penny per week as a single person, or £19 4 pence per week as a couple. While this might seem modest, over a year it adds up to nearly £900 for individuals and almost £1,000 for couples. And remember, this is in addition to any guarantee credit you receive. The eligibility criteria are more flexible than many people realize, which is why so many pensioners who could benefit aren't claiming. The primary requirement is that you've reached state pension age, which is currently 66 for both men and women. If you were born before April 6, 1959, you've definitely crossed this threshold. Your income is the next consideration, and this is where many people mistakenly assume they don't qualify. When we talk about income for pension credit purposes, we're looking at your total weekly income from all sources. This includes your state pension, any private or workplace pensions, most Social Security benefits, savings and investments above £10,000, and any earnings from employment. However, here's the critical point. Having savings doesn't automatically disqualify you. The first £10,000 of your savings is completely ignored. For every £500 above that amount, you're treated as having £1 per week of income, but even with significant savings, you could still qualify. Living arrangements also matter less than you might think. You can own your home outright and still claim pension credit. You can be renting and claim additional support for housing costs. You can live alone, with a partner, or even with adult children, and your eligibility is assessed based on your household situation. If you're responsible for a child or young person, additional amounts are added to your qualifying threshold, making it easier to qualify. Perhaps most importantly, if you receive certain disability benefits, such as attendance allowance, disability living allowance, or personal independence payment, these can actually increase the amount of pension credit you're entitled to through what's called the Severe Disability Edition. This could boost your weekly payment by an additional £81.50 for single people, or £81.50 for couples where one person qualifies, or even £163 if both partners qualify. Claiming pension credit is like receiving a master key that unlocks doors to numerous other forms of support. This is where the real value multiplies beyond the weekly cash payment. Once you're receiving pension credit, you automatically become eligible for housing benefit if you rent your home. Depending on your rent and circumstances, this could cover a substantial portion or even all of your housing costs, potentially saving you hundreds of pounds every month. Council tax reduction is another significant benefit. Many local authorities will reduce your council tax bill substantially or eliminate it entirely if you're receiving pension credit. Given that average council tax bills can exceed £1,500 per year, this represents massive savings. You'll also qualify for help with healthcare costs, including free NHS dental treatment, free NHS sight tests, vouchers toward the cost of glasses or contact lenses, and help with NHS travel costs if you need to travel for specialist treatment. Winter support becomes much more accessible. You'll be eligible for the Warm Home Discount, which is a one-off annual payment of £150 toward your electricity bill during the winter months. You'll also receive cold weather payments of £25 for each 7-day period when the temperature in your area is recorded or forecast to be 0 degrees Celsius or below. For those harsh winter months, these payments can accumulate to provide meaningful relief. The Support for Mortgage Interest Scheme is available if you own your home but have an outstanding mortgage. While this is a loan rather than a grant, it helps you keep up with interest payments on your mortgage, preventing you from falling into arrears or facing repossession. Additionally, you might be entitled to help with service charges if you live in certain types of accommodation and ground rent in specific circumstances. Working out exactly how much pension credit you might receive requires looking at your specific circumstances, but I can walk you through the basic calculation so you have a realistic expectation. Start with the appropriate minimum income guarantee for your situation, £218.15 per week if you're single, or £332.95 per week for couples. If you have severe disability, caring responsibilities, or housing costs, add the relevant additional amounts to this figure. Next, calculate your actual weekly income from all sources. Take your annual state pension and divide it by 52 to get the weekly amount. Do the same for any private pensions, part-time earnings, or other regular income. For savings above £10,000, divide the excess by 500, round down to the nearest whole number, and that's your deemed weekly income from savings. Add all these weekly income sources together. The basic calculation is simple. Subtract your total weekly income from the minimum income guarantee. If the result is positive, that's roughly how much pension credit you could receive each week. For example, if you're a single person with total weekly income of £180, you could receive approximately £38.15 per week in guarantee credit, which works out to nearly £2,000 per year. If you also qualify for savings credit based on reaching state pension age before April 2016, this would be calculated and added separately. Remember that these calculations are simplified, and your actual entitlement might be higher due to additional premiums and allowances you qualify for. The official pension credit calculator on the government website can give you a more precise estimate, or you can speak with a benefits advisor who can work through your exact circumstances. Claiming pension credit is straightforward, and you have multiple options to choose the method that's most comfortable for you. The quickest way is to call the Pension Credit Claim Line on 0-800-99-1234. The line is open Monday to Friday from 8 a.m. to 6 p.m., and the advisors are trained to help you through the entire process. Have your national insurance number ready, details of your income and savings, information about your housing costs if you pay rent or have a mortgage, and details of any disability benefits you receive. Alternatively, you can make a claim online through the government's pension credit service on gov.uk. The online form saves your progress automatically, so you can complete it in stages if you need time to gather information or take breaks. This method gives you a written record of everything you've submitted. If you prefer paper forms or need help with your claim, you can download and print a claim form from gov.uk or request one by calling the claim line. Local Citizens Advice Bureaus, Age UK branches, and pension advisory services often have staff who can help you complete the form. One crucial piece of advice: don't delay your claim thinking you need to gather every document first. Your claim is backdated by a maximum of 3 months from the date you make contact, so the sooner you initiate the process, the less money you risk losing. You can make the initial claim and provide supporting documents afterward. The Department for Work and Pensions will tell you exactly what evidence they need based on your circumstances. After you submit your claim, a decision usually takes around 4 to 6 weeks, though it can be quicker. If approved, your first payment will include any backdated amount you're owed. Payments are made every 4 weeks directly into your bank, building society, or post office card account. Once you're receiving pension credit, you'll need to report any changes in your circumstances that might affect your entitlement, such as changes in income, savings, living arrangements, or if you start receiving a new benefit. One of the biggest barriers to claiming pension credit is misinformation and misconceptions. Let me address the most common myths that prevent people from accessing support they desperately need. The first myth is that if you own your home, you can't claim. This is completely false. Homeownership does not disqualify you from pension credit. Your home is not counted as capital or savings for the assessment. Thousands of homeowners successfully claim pension credit every year. Another persistent myth is that having savings over £10,000 means automatic disqualification. While savings are considered, you need substantial savings well beyond £10,000 before they would prevent you from claiming. Even with £50,000 in savings, you might still qualify for some pension credit depending on your other income. The myth that pension credit is only for people with absolutely nothing is harmful and wrong. Some people worry that claiming pension credit will affect their family or that the government will try to reclaim the money from their estate after they pass away. Neither is true. Pension credit is a benefit you're entitled to based on your contributions to society throughout your working life. It doesn't affect inheritance, and it's not recovered from estates. Your children or other family members won't be asked to contribute or repay anything. There's also a misconception that the claiming process is impossibly complicated or that you need professional help to apply. While getting advice can certainly help, millions of people successfully claim pension credit on their own every year. The process is designed to be accessible, and support is available at every step if you need it. Don't let fear of paperwork stop you from claiming money that could transform your retirement. So there you have it, a complete guide to pension credit and how you could qualify for up to £5,600 or more in annual support if you were born before 1959. This isn't just about extra money, though. That's certainly important. It's about living with dignity, security, and comfort during your retirement years. It's about staying warm in winter, affording the health care you need, and having a financial cushion that lets you actually enjoy this stage of your life. If you found this information valuable, please give this video a thumbs up and share it with anyone you know who might benefit. So many pensioners are missing out simply because they don't know this support exists. You could genuinely change someone's life by sharing this video. Don't forget to subscribe to my channel and hit that notification bell so you're always informed about benefits, financial support, and money-saving opportunities that matter to you. Drop a comment below and let me know if you'll be applying for pension credit or if you have questions about your specific situation. I read every comment, and I'm here to help you navigate these systems. Remember, this is money you're entitled to, money that can make a real difference in your daily life. Don't leave it unclaimed. Take action today, make that phone call, start that online application, or reach out for help. Your future self will thank you. Until next time, take care, stay informed, and I'll see you in the next video.